now.
Trade limitless on HMX, the next-gen decentralized perpetual exchange. Trade crypto, FX, commodities with up to 1000x leverage on the Arbitrum network. Benefit from low fees, multi-asset collateral support, and cross-margin flexibility. Check them out.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Hey guys, welcome back. This is Jimmy. We have a special guest. We have Jakub from Soil. Hi Jakub, how are you doing? And if you don't mind, please give us like a quick introduction about you, yourself, and your background.
Hi, Jimmy. Thank you for having me today. Yeah, my name is Jakub. I'm a CEO of Soil. Soil is a lending protocol that combines crypto space with the traditional world and provides attractive, secure, and stable yield, fully backed by real-world assets. And we are developing Soil for over 2 years with my team. Myself, I got a broad experience in traditional finance. For many years, I worked in a leading consulting companies, including PwC and Ernst & Young, where I rendered merger and acquisition services for major players in Central and Eastern Europe. And then I moved to one of the leading e-commerce and media companies. Then I also worked in M&As. I'm in the crypto space since 2017. For me, all about the infrastructure, blockchain infrastructure, how and the opportunity, how the new infrastructure can and a new opportunity for a new technology that can improve a bit obsolete current financial infrastructure was like some very, very inspiring, and I wanted to dig in more and explore the possibility how the blockchain, the new technology, can be implemented in the existing infrastructure, financial infrastructure. And for me, having a knowledge about the smart contracts and how blockchain can improve settlements, transactions, and so on was very, very important. And for me, it was like a breath of fresh air and a lot of opportunities. I immediately spotted some opportunities. I wanted to build my own project, and since 2 years, we are developing our protocol. As we are merging crypto space with the traditional world, and we are working with and we are partnering with private debt funds of financial institutions that are present in the traditional world. For us, it was obvious that from the very beginning we need to build a rock solid legal framework to be sure that we can cooperate easily with the companies that are present in the traditional world. And to combine the opportunities that appeared in a blockchain space and use them in the traditional economy. So myself, I'm a CEO of the protocol, but I'm proud that I was able also to onboard very talented and experienced guys that joined the Soil. Nick Motz, he's a founder and CEO, one of the leading private debt funds in the Central and Southern Europe. And he is a co-founder of Soil and also chief investment officer in Soil. He has a broad experience in traditional finance, private debt. So it's this guy is also alumni on Harvard. He was on the Forbes 30 under 30 list. I also got a Mateusz Mach, that's founder one of the first blockchain houses in this part of the Europe. He was also on the list 30 under 30. He's responsible for the technology in Soil. Mike Matthew, he's responsible for the marketing. He worked for the leading media agencies in this part of the Europe. So we've got a very strong team and that joined forces and started building a protocol that is very unique, to be honest, because when you combine and when you compare the other protocols that are active in a crypto space, the problem is also always that there is a very limited number of the business model that got a substance behind. So actually, you can create in a DeFi many different protocols that offer some very complicated and advanced, let's say, a farming strategy or strategy that allows you to generate some yield. But at the end of the day, you need to ask yourself whether there is some tangible business behind, and what is the source of the yield. We all in the crypto space, we've got this the saying that if you do not know what is the source of the yield, probably you are the one. And sometimes I got a feeling, and when we analyze what happened recently in the last few months or years with the different lending protocols or some DeFi protocols in the crypto space, we got a feeling, we are sure right now actually that let's say that the interface was promising, and they offer some advanced strategy for the passive income or opportunities for generating a yield. But at the end of the day, it was all based on printing more and more tokens and shifting the tokens from one pocket to other pocket. But but at the end of the day, when you do not have a substance behind, when there is no actual business that generates a tangible yield or tangible money, cash flows, it's all about printing a tokens, and it worked in a bull market when the prices of all tokens went up, and you could print more tokens, and then these tokens could be sold on the market, and that's how you generated the yield. But in a bear market, all these protocols were negatively verified, and most of them collapsed or were forced to significantly change the business models. Yes, of course, we know what happened with the Celsius, we know what happened with the Anchor protocol, what happened with the Voyager, and so on. These are all the protocols that simply were purely based on a print and on an inflation of tokens, printing tokens, and the business model were not supported with some tangible business model that actually generates something, produce something. Of course, we've got also a positive examples like Avi or Compound. These are the full DeFi protocols that the business model were verified both in a bear and bull market. These business models unfortunately got some limitations resulting from the fact when we talk about the stablecoins, let's say, and if you want to put the stablecoins in such a business model, they got a problem. The problem is that they got they are based on a money market mechanism. So when there is a bull market and the investors are eager to risk more money and leverage their positions, in such business models you can generate more profits. But when there is when nothing's going on the market and the volumes are low and the investors are risk averse, then this business model needs to limit the profits, and that's why they got some limitations when we talk about what kind of yields they can provide. So let's say Avi or Compound, they can offer around 2 or 3% on the stable coins, because that's the level of the yield they can offer with that's the limitations of the business model. Because on the other hand, when you want to generate the yield on in a lending protocol, you need to have a other party that is eager to borrow money and use their coins as a collaterals. Yeah. So, and in our business model, our business model is completely different. So in our business model, we are using a real world asset, but it's not a buzzword, because right now everyone is talking about the real world assets and how they want to implement it in their business model. But sometimes I got a feeling that it's only used as a buzzword, as AI is always also used as some. Please add some AI component to your business model. It doesn't matter whether it fits or not, but it's buzzword. In our case, in our business model is quite simple. So simply we are taking a stable coins in a crypto space and then convert this money into fiat money and use it to finance the corporates operating in the traditional world. And the loans that are granted to the corporates are fully backed with the real world assets. And what kind of real world assets are used to back this loan? So this might be like a land plots, real estate, personal guarantees, ownership titles to the equity, ownership titles to other investments and assets. So these are diversified basket. This is a diversified basket or different real world assets that actually serves as a collateral. So in case of the default, let's say, then you can take these assets, turn it into cash, and use it to pay back or to pay back the loans. So in this case, these are actually the real world assets. Yes? So that are used to back the loans, but also the yield is generated by the real world asset. What does it mean? It means that we are using stable coins to turn to the fiat money and to finance the corporates, and the corporates are from the different sectors. So it can be like factories, manufacturing companies, real estate companies, financing companies, or so on, so on. So different various parts of the economy, and these companies are using the soil as an alternative source of the liquidity, alternative to the bank loans, to bonds, to equity, and they use this capital to finance growth of their companies, and they generate profits, and these profits are used to repay loans, and the loans are repaid in a real bucks, so in a real money. So we are not dependent on a price of the tokens on exchange, in a crypto space. We are not dependent what is the sentiment on the crypto market, because these two legs are not only soil is in common. So this is like a bridge connecting these two different worlds. But at the end of the day, some corporates that are taking loans can get nothing in common with a crypto space. The CEO of particular company may not even know what's going on in the crypto space, what the blockchain is. Yes, but at the end of the day, they can get a financing from the blockchain. And why the blockchain and why the crypto space in this business model is crucial and is game changer. Because let's have an example. So if you are a corporate in the traditional world, or you are a private debt fund and you want to get a financing, so it would be, even though that we are saying that we are living in a global economy, in a digital era, when the transfer of the money is very easy because we can use bank account that is 100% online. But at the end of the day, the infrastructure is, as I said at the beginning, obsolete. So let's assume that you are the private debt fund in Berlin, let's say, and you want to gather your investors. So how it works right now? So you need to do like a proper and old school roadshow, use your network and find investors from your network, and gather some you need to target some particular investors, and you need to get like a typical advertisement, and saying, okay, we are the private debt fund, we are offering you this and this. It would be difficult, and I guess it's even impossible for such a, let's say, private debt fund located in Berlin, or Paris, or London, to get to like an individual investor in Buenos Aires, or let's say in a Nairobi in Kenya, because it would be, first of all, it would be very difficult to reach to particular investors, and the second of all, it would be very difficult then to onboard them, because you've got a different currencies. You need to pay a significant cost of the transaction cost when you need to, like, let's say, convert some local currency into dollars, then send these dollars over the bank account to Europe, then you onboard it with the administrative stuff, and so on, so on. What we are doing, so we are saying that, okay, thanks to the fact that you got a blockchain opportunities and a protocol like Soil, all you need to do is simply connect your crypto wallet. You can allocate your stable coins, and in a minute you can start earning your passive income, because the transaction costs are insignificant. Onboarding is very, very fast. All you need to do is seamless KYC. And as I said, someone that is a retail investor, let's say in a Nairobi in Kenya, within 1 minute can invest $1,000 or $1 million. There is no difference without let's say, transaction cost, and start generating passive income based on the loans to the corporates in Europe. Thanks to the fact that they can cooperate, they can allocate to the money to the private debt funds operating in a Central Europe to begin with. But then with Soil, of course, so to begin with, we are starting with Amount, that is the leading private debt fund in this part of the Europe. But we will also add another private debt funds like that operates in Scandinavia or in US. We are in touch with the managers from First Funds from that part of the world.
Yeah.
And that's the beauty. So you can very fast access to the clients that previously simply you couldn't reach them, and that's how you mitigate and you limit the client acquisition cost for the private debt funds. And on the other hand, you can investors that are wherever they are in the world, simply they can use the opportunity, and within few minutes they can start earning passive income and get the access to the financial products that were before not unavailable to them. So that's the game changer in the access to the capital for the traditional businesses, traditional and regulated funds like a private debt funds, because using the infrastructure gets them access to the clients that they were previously unavailable to them, simply because the reach and the way how they can target them and onboarding process would be simply possible but extremely expensive, time consuming, and at the end of the day, I guess that it would be not profitable at all. Yeah. So that's the game changer. That's why we build this protocol. That's what we are doing. So we simply on the one side, we are offering crypto investors access to the secure, transparent source of the yield that is paid in a stable coin. So if you are depositing your stable coins, you got the yield in a stable coins, not only some tokens that are that can be inflated. So you've got a transparent source of the yield, and on the other side of the equation, we've got the financial institutions or corporates that got an alternative source of the liquidity from all over the world, truly global access to the money. So that's the Soil in a nutshell.
Wow, Jakub, thank you so much. This is such a beautiful explanation of soul and real world assets. Just sitting here listening to you, I already learned so much. And also like a big shout out to you and to the team. I do understand when you come from. I'm coming myself also from a Big Four background. If you come from a Big Four background, especially when you have when you did a lot of transaction advisory services, merchant acquisitions with such a team, it definitely gives the team a big advantage, because you guys really do understand how the world works and how business really works. You also touched on a really good point, and this is the point of sustainability. Sustainability is one of my key, let's say, my key concerns actually, generally in the DeFi and crypto space, because it's really easy to get yield, but then again, getting a lot of yield opens actually the door for dumping the tokens on other people, and then suddenly, sooner or later, it's not sustainable anymore. As you said, in a bull market this will work, but in a normal, like in a neutral and a bear market, this is not going to work. What I've also seen with other projects, and not gonna call them by name, is they have like a real strong correlationship with the revenue they actually generate and the price of the token. But what I've heard is from you, just Jakub, is these are actually kind of independent. It doesn't matter, or we if Sol is in, or if crypto is in a bull or a bear market, the business model still generates money and can continue. And I think this is a big advantage actually over many other projects in the real world asset space.
Yeah, the difference in our case, the difference is that how to build the tokenomics that is linked to the performance of the project, but the this is always the question: what is the first, egg or chicken? Yeah. So it's so, and in our case, our token is related to the performance of the protocol, but the performance of the protocol is not dependent on the price of the token.
Yeah.
So that's the crucial part. So as I said, so in our case, whether the price is going up or down of our token, we are fixed cash flows that are denominated in a real bucks, in a real money. So it means that we can offer crypto investors fixed yield, and we are not dependent on the price of the token, yeah, because we are generating cash flows in the real world. So let's assume that the price of the token went up or down, no matter, we still can provide the same yield and the same interest over the deposits that were located in our protocol. So if you deposited $1,000 and then the yield paid in a stablecoin is, for example, 8%, then you will get the 8% in the stablecoins, no matter the price of the token went up or down, because we got secured these cash flows for this loan in a real world assets in the real world that is denominated, and the cash flows are denominated are denominated and actually paid in a real money. So it means that we do not have to print more tokens to provide you this 8%. Yeah, and that's the beauty of this business model. And on the other side, when the total value locked is growing in our protocol, we are generating more and more profits, and then the profit that is attributable to the token owners results in a higher price of the token, because actually the price of the token is linked to the performance of the protocol.
Yeah.
That's how it should. That, in my opinion, that's how it should always be in the economy, in the company. Yeah? That's how it should be. That's how the economy should work.
Yeah, that I think that makes a difference in a very positive way. We all know that real world asset is not just a meme anymore. A few years ago, almost nobody talked about real world assets. Well, just a few, but suddenly, it's getting more attention, because it's just not people within the crypto space talking about this, but also big institutions like BlackRock. Their forecast is that the real world asset and the tokenization space will grow and into a 10 trillion business industry. Do you think that this within a few years? I think it was like within 2025 or 2028. I can't recall it exactly. But do you think like this number, like this 10 trillion, is a little bit too much, or is it really in line with how you see the future in the real world asset?
Now, let me, from my perspective, our addressable market is 14 trillions, because this is a value of the private debt of the debt in the world, let's say. So getting only a drop from it, for us, it will be like a massive success.
Yeah.
So of course, but this is like a 100%. Yeah. So the 10 trillion that the BlackRock referred to, I assume that it not only it related to the tokenization of different assets. So it doesn't mean that it only relate to the debt, yeah, because so you also got some, let's say, some assets, like you can have a tokenize some real estates, let's say, or I guess that's what they meant also. Yeah. So, or you can tokenize some, let's say, cars. If you've got some, unique car that and you want to invest in old mobiles and so on. So this way, or you can tokenize, I don't know, like some luxury watches or whatever. So these are the different types of assets that some projects are trying or looking for the opportunity how they can tokenize this kind of assets. Yeah. So I assume that this basket and the value of asset that can be tokenized, it's the market is massive, but I think that this market should be, from my perspective, should be somehow separated, because right now one of the let's say the leading asset that is used as a real world asset to be tokenized or is already tokenized, it's treasury bills. Because actually that's what some projects are doing. So they are simply taking a stable coins and then invest this money into the treasury bills. Huge part of the circles asset are kept in a treasury also. Yeah. So this what we are seeing. So this is like a, I don't know if this is like a tokenization or it's simply like a linking towards, because I assume that some people that are active in the crypto space are looking for, let's say, more advanced way of tokenization that than only simply taking a stable coin and buying treasury bills issued by the government of the United States. Yes, but that's where we are right now. So but in the future, as I said, so if we will tokenize bonds, if we will tokenize real estate, this will be a massive market for sure. So yeah, so for sure there is like a lot of opportunities for tokenization. So but I think that it's not like a, I think that it will be like a part of the evolution, not the revolution. So simply we normally use the blockchain infrastructure, as I said. So we use the infrastructure to improve the processes that already exist, but the transaction will be settled faster. There will be more transparency, and it will help us to make the business smoother. And that's what will happen. So it will be like for me, it will be like a gradual transformation into the more blockchain type of transactions. Yeah? So the case is that we need to transfer financial infrastructure on chain to make it happen. Yeah. So like let's say if you want to tokenize a real estate, you can. The main challenge is to have it opportunity and have it to do it in a proper way in line with the regulations. To have a one token that, let's say, the one token represent 1 square meter on 1/10 of the square meter, also on so on. So actually, that there is because you can issue token easily and tell someone that it represents something, but as long as it's not legally bonded, then it's only like a narrative.
Yeah.
So I assume that the assessment of the 10 trillion or whatever the number is by BlackRock, I guess that this is a indicator, the number, simply to show what is the opportunities, to see that the market is massive. I think that in the end the number will be even bigger, but the pace and when we will be able to let's say to benefit fully from the real world assets that are that are kept on chain and are in a tokenized form, it will depend on the increase in the adoption space, and the adoption will really effect of the regulations, because to tokenize debt, to tokenize real estate, to tokenize whatever, we need to have a regulations, because of course we can do it like let's say in a not direct way, but at the end of the day it will not speed up the adoption. To speed up the adoption and make it available to everyone, everyone need to have a confidence that the tokenization is done with in a, let's say, legal artist way, so fully compliant with the regulation, and token owners are got really, the token really represents the value. So yeah, so for sure the real world assets will trend, and it's trending right now. Massive opportunities for sure. For me, it's like simply improving and implementing the technology into the transactions that are right now present in the traditional world, but simply replacing the settlements and the way how we do a business with a better infrastructure, and since in this case with a blockchain. And yeah, and so bless you. So I guess that's our bet. Yeah. So that's why we are doing this protocol, and actually that's what we are doing in a soil, because we know that as for now, because of the regulations, we are not it's possible to have everything on chain. Yeah, because you simply cannot have like a collateral, like a real estate, have a collateral in the way of the real estate on ownership, title, equity in on-chain way. Yes, but in the future, for sure, it will be available on-chain. So we will move more and more towards the blockchain. But as for now, we are the hybrid that connects to different worlds. But with the increased regulations so the increased implementation of the crypto-friendly or blockchain-friendly regulations, I guess that the adoption will also explode, and we will see more and more protocols that are doing business models backed by real-world assets. Let's say.
Yeah, for sure, 100%. Sooner or later, this will grow and will accelerate. And nobody can escape from this eventually. Maybe like a personal question. Where does the name soil comes from?
Yes, the soil is as a ground for growth. That's we are financing the corporates, we are financing the growth of the corporates. So we are giving them the resources, we are lending them the resources to grow, and that's why the soil. Yeah, so it's sustainable growth for economy, companies, and so on.
I love the name. I love the name. I love really the name. It just makes so much sense to have also like that the name represents also the not the only the business but also the sustainability part of the entire business.
Exactly.
Do you see like you could you're like a long background in business and consultancy in crypto. I think you're also one of the OGs, right? You started in crypto in 2017, you said. So this automatically means you have like this OG title in the crypto space. So you know a lot about crypto space, about Web3 wallets, about blockchain, smart contracts, and all of that. But some like normal people who haven't really touched crypto yet, they're not really that familiar with them. When it comes to the adoption and about when it comes to the tokenization of debt, do you think that this could be a obstacle, or is it easy for people to get onboarded?
Yeah, so for sure, we as an industry, and we need to have a more and more. Because we need to focus on like say first we need to start to know how to walk, then start learning and running. And I think that sometimes it's in the industry, a lot of projects are focusing on offering or building some more and more advanced hyped protocols when we still got we still lack like elemental puzzle in the whole industry. It's like it's onboarding new customers, and it's still a lot of work to do, I guess, because if you are like someone that has, as you said, nothing in common with the crypto space and wants to connect to some DeFi protocol, whatever. So the process is difficult. Let's be honest. Setting up and it's not easy. And second of all, you've got like a lot of threats because doing some mistakes when you are, let's say, sending some funds, you can easily lost it, and you cannot turn it back. So I think that some projects should still focus on, let's say, first step. So how to walk through and how to help completely new customers to do a first step. Because setting up an account on exchange is quite easy. Let's be honest.
Yeah.
But recently we saw that, but transferring money to the exchange, I got a feeling that it's more difficult than it used to be a few years ago. Because a few years ago you could simply add your money from bank account and so on. Right now you've got some limitations. You've got you've got many new, let's say, intermediaries, companies that are handling the process of transferring money from the banks to exchanges. So it used to be easier than it is right now. So also it not helps to how to increase the adoption. The second thing is that okay, this is a, I guess that this is a part of the regulations, yes, and what happened in the US and what happened with the FTX and so on, and the effect of it, and it turned out that a few years ago it was easier to transfer your money from the bank account than right now. And so, of course, banks, the traditional banks, also are simply not helping you to transfer your money to some exchange because they are asking many questions. Sometimes they lock your account and so on because they are saying that there might be a fraud or something like this. But at the end of the day, they simply make it harder. So you asked about the adoption, you asked about the reward asset, what BlackRock said, and so on, so on. So all these ideas for sure will be present in the future. But for me as a builder, I would really wish to have the first step process easier, because to increase the adoption, we need to make it easier for the new customers to support the inflow of the new funds from the, let's say, new customers. We need to make it easier, and I think that this is a lot of that we still need a lot of work to do to make the first step easier. So before we will focus on, let's say, some advanced protocols offering some strategies for passive income, or yielding opportunities, farming opportunities. This is a nice opportunity for everyone, but first help these people to be on the board and then offer them the other product. Yeah? So first help them be active, and I hope, to be honest, I see maybe the central bank digital currencies will be some opportunity to increase the adoption, yeah, because a lot of projects, a lot of people are saying that the CBDC may be like a killer for the blockchain or crypto space, not for the blockchain, for the crypto space, for some projects and so on. But I see the opportunity also in this because when the digital currencies issued by the central banks will be massively available, then it means that then a lot of funds will be available in the blockchain space. So for projects like mine, we are fully regulated. We've got even approval that our business model is fully compliant with the regulations, not only with the current one, but the incoming. We are not only given like a legal opinion, but also from the financial authority, we've got the approval that our business model is in line with the regulations. So we are waiting for the new, let's say, new wave of the new money. And when we will see that there are like a central bank digital currencies available, so we can easily, let's say, implement opportunity for the users that are using these currencies to also be a part of our ecosystem and log the found in our protocol and earn a passive income. So for us, it will be, I guess that for us it will be massive opportunity. So yeah, so we are to wrap it up. So I see that and actually this is one of the challenges. Yeah, so we need to still help and make the process easier to onboard new customers if we want to have a crypto space and the industry to thrive. Yes, and a lot of work needs to be done to make it better.
Yeah, that makes totally sense. And I know that you guys have been building really, really hard. And one of the beautiful things you have built is the website, which is pretty straightforward. Would you maybe mind to walk us quickly through the website so people can quickly also see how things work with Soil?
Sure. Can you share your screen or?
Yeah, sure thing. Let me otherwise share my screen.
Yeah.
My second monitor. Share a screen. Yep. So here we are, the website.
Yes. So we are, as I said, we are lending protocol that offers yield on the stable coins, only on the stable coins, because we do not want to take a risk of the variability of other underlying assets like a Bitcoin or Ethereum. So we are offering stable and secured yield on stable coins.
May I quickly ask a question, Jakub?
Yeah,
Is
sure.
like all stable coins, or are some stable coins excluded from the protocol?
We to begin with, it's on a USDC.
Okay, yeah. USDC. Yeah, that makes totally sense.
Yes. So it's as I said. So the yield is generated by granting loans to the companies that are operating in the traditional world, and all these loans are fully backed with the real world assets. We are fully regulated, so you can see that we are a regulated approach. We are partners with the Three Dots, Headman, Blockchain House, Fractal. We did the IDO on a CDFI pools and engine starter. One of our first investors that trusted us and believed in our business model was Big Brain Holdings. So so this is a VC fund that first supported us. Our main partner is Mount TFI. This is a supervised and regulated private debt fund that is one of the biggest private debt funds that operates in Central and Southern Europe. So this is our partners. As I said, we are offering up to 14%, but our main product is a stable coin yield. So we are paying up to 8% in stable coins. And so if you deposit your stable coins, you will get a stable coin. So you can easily project what will be your cash flow, and you are not, you can project your cash flow because it's not dependent on the price of the tokens and so on. So you've got like a guaranteed 8% in a certain pool paid in a stable coins, and on top of it, you've got some boosters paid in our token, but it depends on pool. It depends on what kind of investor you are, whether you are holder of our token and staker. It depends if you are early bird, and so these are the different. We've got a different incentives for our partners, but as I said, these are the incentives that are paid in our tokens for the different users. But yield paid in a stable coins is always the same no matter what. Yeah, so it's
Interesting.
fixed and secured.
Yeah. A quick question, Jakub. Is there also like a lockup, like when you provide like any liquidity, and if you want to be eligible for this APR, is there a lockup period of a few weeks, months, or days, years?
Yes, we've got the lockup period. So this is like a typical financial product. So it means that if you've got a different pools, and if you are for the longer pool, the higher the reward, higher the yield.
Makes sense.
So we've got the pools from 6 months, 1 year, 18 months. So you've got the different pools, but so and the yield of course is different for the different durations. Yeah. So but what is crucial in this part is that each pools are equally secured. But the duration is different and the yield is different. So I also wanted to add one more thing that is crucial. There are also some protocols that are offering yields based on a real-world asset, as they are saying that they are financing some corporates and projects. But in our case, each pools are managed by the asset managers from the private debt funds. It means that they are responsible, investment team is responsible for screening the companies, doing a due diligence, providing a collaterals, and in case of some defaults, let's say, then they are also responsible for handling the process of turning the money into the collaterals into cash. And in the Mount TFI, the investment team has experience with the acceptance rate, for example, for the corporates is only 7%. So we've got a very strict and conservative risk management policy. It turns and that affects that we've got a below 0.5% default rate. So it means that the reserve fund on the level fund is around 1%. So it's higher than the historical level 0.5% default rate. So it means that the reserve fund is 2 times higher than the default on the historical level. That is and it's very low, extremely low. So it means, and it shows the performance of the investment team. Yeah. So So that's how we are able to provide and be sure that we will provide and the yield for the customers, and that is competitive, transparent, secure, and stable over the time. Yeah. So that's the unique for us, our product. So we are working with the asset managers that got a proven track record and so on, and we know that how to mitigate the risk of the default. Yeah. So that's the critical part if you compare it with the other protocols.
Yeah. Okay, that's a big difference. That's a big difference. So, what is a good place for people to learn more about soil? I see here, of course, like the documents.
Yeah.
People can buy the soil token.
So yeah,
From
so is currently traded on Mexi and Gate.io. We also got a pool on Uniswap.
Okay, that's cool.
You can find a contract address on our website. As we are product, we already signed a contract with a Mount TFI. This is our private debt fund that make available to begin with $25 million for liquidity demand of the loans. Protocol itself will be launched next month. Right now, the protocol was by Hacken, was audited by the Hacken. Security audit was performed by the Hacken. We've got a maximum score from it. Right now, we are doing first integration with the one partner to when we want to start with them. So we are right now doing some polishing touches, and soon the protocol will be released, and all products will be available to our customers. You can sign up for the waiting list if you want to get if you want to get all details and news and when the protocol is launched. So as I said, from the technical perspective, it's all done. Right now, we are working on the integration with the first partner, enterprise partner, and soon it will be released, and everyone will have an opportunity to earn a passive income that is secured, fixed, stable, and transparent. So that's the pretty unique, pretty new for the space.
Yeah, and trusted by a lot of players.
That's true.
So you guys hear this is a message to those who are listening to this video. You hear that right. You can join the waiting list. Quickly, Jakub, where should they go to join the waiting list?
Yeah, so if you want to join the waiting list, you can launch app. On our website, you've got a button to launch app, yes, and then you've got an opportunity to connect your wallet, or when you connect your wallet, or you can simply in the section earn them add there is a button, and you can provide your email and your name, and we will provide you with all details.
You hear that right, guys. Just connect it, join the waiting list.
Yeah.
This is the Twitter of Soil Farm. So it's soil_farm, soil. You cannot miss it. Always follow the guys with the blue check mark. Don't follow soil with no check mark. Very important to know. Beautiful. Sorry, I was checking the tweets of Soil. Couldn't control myself. Beautiful website, and I believe also really beautiful business model, Jakub. You gave us so much alpha, not only about soil, but also about real world asset in general, and how it works, and how soil works, and how people, like normal people like me here in the Netherlands, you in Poland, people in all over the world, it doesn't matter where you're from, everyone can basically benefit from soil and its business model, which is independent basically from the market, backed up by a lot of big players, and there's a really good strong team behind soil. So ladies and gentlemen, definitely go watch, check out the website soil.co. Check their website. Jakub, are you also is there like any place where people can follow you? you yourself?
Yeah, so I got the Twitter, of course. I'm not maybe as active as other CEO
Uh-huh. Uh-huh.
of other projects, but yeah, you can find my Twitter also. It's Jacob dash Bojan. But you can also on the website in the team section you can find a LinkedIn. Oh yeah, so
Yeah.
you
Yeah.
can start with following my LinkedIn. You can also verify everyone on our from my team. You can verify their LinkedIn's, their background, their experience. So for
Yeah.
sure, for us, as I said, we team is fully doxed.
Mm, mm,
So
mm, mm.
that's our approach to building a business model.
Yeah, no, for sure. So, you guys, you heard that right here again. Do your due diligence. Check Jakub actually on LinkedIn, and Nick and Matthews and Michael, so you can discover that all of them are brilliant, really smart people working on something big. It's not as in a. It's kind of like a new project, but it's not built from scratch this year. There was 2 year or more background research behind it, building behind it, a lot of efforts, a lot of probably also sleepless nights. I guess, Jakub, when you're building really hard, you're gonna sacrifice also a lot of things. And yeah, give it a watch, guys. Give it a look. Jakub, is there anything else you want to share with us before we wrap up this video?
Yeah, thank you for opportunity for having a chance to explain what we are doing. I really do believe that we are improving the crypto space, and I really mean it because there are many people that simply lost a lot of money because some protocols collapsed, like a Celsius, FTX, Anchor, and so on. Especially all the Luna ecosystem was, I guess, traumatic for many people, and so on. And I really do believe that I really believe in the technology, and for me, it's a breakthrough.
Mm,
But still, we need to provide and build more and more sustainable and reliable projects, and the same as it was in let's say in the early internet era, when there were also, before the bubble, there were like many projects, or people that invested in some companies that said that they are based on the internet or investing in the internet, but there were also some failures. But it
yeah.
didn't mean that there was a problem with the internet itself. Yeah, the internet was the breakthrough, but there were
Yeah.
some failures, and some failure, and some projects that simply didn't deliver. But at the end of the day, the internet turned out to be like a reshape the whole world. And I do believe that it will be the same in a few years. When we will look back on the blockchain, crypto space, and so on, we'll say exactly the same, that the technology defended itself, and reshaped the world. Maybe not in the way how internet did it, but of course this is an improvement. And yeah, and it will be like a standard for the companies, and it will be a element of our everyday life. But I guess that all will be settled up in the background. We will not be even aware that we are using a blockchain, but
Yeah.
we benefit from it. And that's what we are doing. Yes, so right now we've got a time when people are still saying, yeah, I guess that when I talk with the people, and that's the problem also with the adoption, I guess. But
Mm,
still, people cannot tell the difference between the crypto and the blockchain. Sometimes they link the
yeah.
prices of some coins, meme coins, and so on with the blockchain. That's the drawback. That's the problem, I guess. But I guess that ultimately, it's the technology will go in a one way, and the coins, and all these projects that are not got nothing in common with the technology, but simply they leverage or use the opportunity that the new technology gives them, simply will go the different way. But yeah, but we are as a soil are going we are here for the technology, as everyone is saying. So we really do believe that we will improve the financial world a bit with our protocol, and that's what we are doing.
Thank you so much, Jacob, for the inspirational words. Ladies and gentlemen, make sure you follow Jacob
Jakub, make sure you follow Soil Farm, check the documents, check the team, and understand what they're working on. Real world asset is not something to take really light. Sooner or later, everyone will touch real world asset. Me, myself, my grandmother, my aunts, my uncles, my friends. Things will change really quickly. Don't miss out this space. Jakub, again, thank you so much. Until the next time.
Thank you very much.